Good evening, UPBOptionMillionaires.com. Thursday, well after closing bell on this November 10th, 2016, S&P 500 futures down a little bit here, heading into the overnight hours. But if you look at this wonderful pattern here, if we have S&P 500 futures off the lows that we saw for the election, if you look, this wonderful flagging pattern here, we broke to the upside this week, possibly an omen for new all-time record highs. That remains to be seen. But certainly, if you look back at the start of the year, each of the dips, and we've seen this happen since the lows in March 2009, each of the dips have really reversed nicely up, and in each case to new all-time record highs. We had the dip at the start of the year. We had the dip for the Brexit. Remember Brexit, everybody thought the market was going to fall to pieces. It did the exact opposite. Same thing here heading into the election. One did not expect Trump to win. That sparked some selling in the overnight hours on Tuesday night into Wednesday. And if you look, we're actually limit down there for a little bit just before midnight, before recovering and then some. So if you look, the market was not expecting Trump to win. And if Trump did win, thought that the market would move lower. Well, it's done the exact opposite. You can see Dow Jones Industrial Average up to new all-time record highs, S&P 500 getting there. The reversing of the losses again back with Brexit. And this is kind of what this market has been compared to recently with that pullback. This type of move is a Brexit-esque type move. Ultimately led to new all-time record highs back in the summer. So could we possibly see a move to 2,200 or better here? And as the S&P 500 heading into year's end is a distinct possibility. So let's look at some individual names. But before I do that, I just want to look at the VIX. As I talk about this a lot, these spikes to the upside over the last couple of years ultimately end up reversing sharply. And this one here, a pretty dramatic move to the downside for the VIX. Remember, heading into the weekend, we had the Clinton investigation coming up, uncertainty for the election. And then over the weekend, FBI cleared Clinton. The market was up over 1%. Sending the VIX tumbling. And you see just a really dramatic move. One of the sharpest moves to the downside sell-offs for the VIX that we've ever seen. And each of these sell-offs has elicited a sharp rally for the stock market. Again, the start of the year, we had to move up to almost 30 in the VIX. Sharply reversed, big rally to the upside. The Brexit move, really sharp reversal to the downside after getting up almost to 30. Again, in September, we had a sharp move to the upside for the VIX, swiftly reversed. So the same kind of story here. Each of these rips to the upside for the VIX quickly reversed. You can go back to the Ebola back in 2014, and we had that flash crash back in the summer of 2015, the China flash crash. All of them swiftly reversed, ultimately being a great buy the dip opportunity for the market. So again, is this time going to be any different so far? No. And the question now remains is how much more legs does this market have? Is it going to launch up to record highs before year end? If you look, the VIX, this morning's action brought us down to support here before the VIX actually closed higher today, up 2.5%. So when you see the market and the VIX kind of trading higher, certainly not a good omen. The VIX has usually been a good indicator of where the market's headed here, at least over the last 3 to 4 weeks. But the NASDAQ was down, so that's something to keep an eye on. You had some of these big Amazon, Google, Facebook all trading sharply lower today, helping to raise a little bit of uncertainty into market. Let's look at those charts here. We'll start actually with Disney reported earnings after the bell today. You can see the breakout here of this wedge that it had heading into the earnings report. Looks somewhat bullish. Did a nice strangle on the 97 calls, 93 puts. Expecting a big move, and we did get a big move. We moved down to the 91 level for Disney before heading up to 97. So it's pretty two-faced earnings reaction. The first move to the downside on the initial report, and then the market kind of sighed a little bit. Relief that Disney's earnings really expected to pick up next year. So we'll see if it is setting up here, as this chart indicates, for a move back into triple digits for Disney, something that really it hasn't seen since its earnings report back at the start of the year, sent it under $100 a share. So that's Disney reported earnings after the bell today. Looks somewhat bullish. We can continue the momentum from after hours to the upside. You're looking at $100 before the end of November. Let's look at another chart. Wynn Resorts started off the day up over 1.5%, near the 89.50 level, and then sharply reversed to the downside, heading to support here. This wonderful, if you look really, heading back to the lows we saw in the middle of 2015. A nice little bull flag here for Wynn as long as this level holds at about the 85. So tomorrow we hold 85 on Wynn, setting up next week for a move back into the 90s. something to keep an eye on. But if it breaks, we're looking for a move back into the 50s. That's this really two pretty straightforward price movements for Win heading into the end of the year. We hold support back into triple digits. We break below. Trade to puts for a move into the 50s. Win Resorts, Facebook, again, was down with FANG. Not as much as Amazon and Google, but certainly to the downside. But really mitigated some of its losses into the middle of the session. You can see it was down over 4%, but held support. And I talked about this on Twitter real quick. If you look, in the middle of the session, we hit our lows, found that support. Look at that support line right there. Hit it almost to a T at the 1550 level before reversing to the upside. If you look, that support line goes back to 2013 for Facebook. And each time it's hit it has been a great buying opportunity for the stock. And look at us back to 2013. We came right down to it. This is a line I've had in the sand here going back a couple years. And today came back almost to a T. Almost, look at that. I mean, it's pretty phenomenal to see it come down to that support level. And literally $5 to the upside for Facebook. Setting up a possible refresh for the stock. I was talking about this even a couple weeks ago when we were coming down after earnings, that this would be a great spot here. Stock to refresh, reboot itself, and now set itself up for a move into the 130s and 140 for Facebook. The GOOGL, Google was down over 4% today. Cut some of its losses down only 3%, which is still a huge move down $25 into the closing bell. This flag possibly starting to give way here. We tried to break out above it after its earnings report. Now breaking below it. Kind of held it. See the little bit of the wick there, the rejection of the lower prices. So as long as we stay in this channel here, still the possibility we set up for that move to $1,000 to beat Amazon there. And speaking of Amazon, Amazon was just destroyed today, down over 6% at one point, dipping below the 720 level. This is a stock that pre-market was up at 780 a share. And you can see this huge candle. What a range today. The market doesn't know what to make of Trump here. Amazon, there's a lot of negativity from Trump of talking about Amazon, and so we'll see if that affects the stock here in the short term. Longer term, the analysts are very bullish on the stock. I mean, some of that, what was one of the targets we saw come across the other day? $1,300 a share. So you can see this action here is probably going to be short-lived as far as before we head back over $800 a share. But who knows where the selling is going to stop. We're going to break under 700 first. There's a distinct possibility. You go back to 2015, this trend line broken much like it was to start 2016 before we had a sharp reversal. Remember, the start of the year, how many people were buying the stock at 480, and then you get up here, we're in the 800s, and seemingly everyone's upgrading the stock. So probably a good thing for Amazon to be pulling back here from the long-term perspective. And again, when the stock was in the 200s to 180s, nobody was as bullish about the stock as seemingly everybody was just a couple months ago here at $800 a share. So Amazon, is it going to reverse? Is going to be a great buy point. I think tomorrow after today's trading action, if the dust starts to settle, might be a good lotto trade for a move back up to the 760, 770 level. For Amazon, let's look at a couple other stocks here. Simon Property Group, this is one I've watched closely, the Real Estate Investment Trust. And it's really taken quite a tumble recently, over a $40 move. You remember just the start of the summer, seemingly everybody thought it was just this great stock. You see all these headlines come out. Oh, why this is Real Estate Investment Trust, great place to park your money. But guess what? If interest rates start to rise, some of these corporations, and I'm going to get into a couple other ones real quick before I end it here for tonight, that are heavily indebted or have utilized debt for their acquisitions to grow, are seeing their stocks pull back here. And if, you see the bond market pulling back, this implies going forward, capital is going to cost a little more to acquire. And some of these corporations that are going to need capital just to maintain what they have going on now, not even adding to their share buybacks or increasing their dividends, they're going to take a hit because a lot of the price action over the last couple of years has been predicated upon the availability of easy money. And these real estate investment trusts are just one of many stocks that are going to really take a hit here, I think, in the weeks and months ahead as investors start to realize, going forward, the cost of capital is probably going to increase and you're not going to expect the same rate of return because of that. So Simon Property Group, look for support here about the 165 level. One that really took hit. One of my favorite, this is the beginning, early stages of the popping of the prefabricated pizza dough bubble, as I like to call it. Domino's Pizza down over 6% at one point today, recovered a little bit, but you can look at this candle to the downside. Whoo! But if you look back from a long-term price perspective, I mean, really just that it's, it's just a little pop on the back of that pizza crust. It hasn't gone bad. Of course, pizza doesn't really go bad, right? I mean, come on. But if you look back, what was this, like a $6 stock at the lows in 2009? And guess what? We're back to their old tricks. Domino's Pizza is a stock I've been watching for many, 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 many moons that historically has utilized cheap money to really just line the pockets of their executives and their shareholders via special dividends. I mean, it's these huge, tremendous, as Trump would like to say, payouts to their shareholders via these special dividends, and then buying back stock like it's going out of style. And if you look heavily leveraged, the amount of debt that Domino's Pizza has, mind-boggling. Also, if you look, a lot of the stocks that pull back today in a significant fashion were ones with high price to earnings ratio. Not these, the Dow Jones Industrial Average is at a record high because these are sound blue chip stocks. Domino's Pizza, yeah, I mean, it was a $7 stock back in 2009 for a reason. And we're at 161 a share for a reason now because, why? Less shares out there. So as they start to open more stores and increase their revenue, that's being based upon less shares. So their numbers just look better and better and better until the money does not come as inexpensively as it has in the past because interest rates start to rise. And that cheap debt they've utilized to line the pockets of their shareholders and investors and buy back stock, well, it's a little more expensive now. And when they have to roll that debt over, interest payments are going to rise. So that's going to affect earnings. So we're starting to see the early stages of the deflation of that prefab pizza bubble. That is Domino's Pizza. And you look for long-term perks. We're going to see the bond market maybe settle down a little bit here, and maybe we'll get a bounce in some of these stocks to get a good long-term opportunity to trade for downside. 140 level, look at this gap here. It still hasn't got filled from the summer. This would be a good spot to start. For Domino's Pizza, we're going to see it also with some of these stocks that have just gone crazy. I mean, just how much makeup can you put on a stock like Ulta, which is up? And if you look over the last 10 years, all of these companies, Buffalo Wild Wings, you see Chipotle Mexican Grill, which ironically enough was up 6% today. At some point, they're going to come back down. Gravity is going to pull them down. And you can see it already. The money's starting to flow into stocks like Caterpillar, because all these projects that Trump has going for the infrastructure is going to boost some of these stocks. So you can see Caterpillar head back up into triple digits. How about the banks? JP Morgan Chase, new all-time record high. Look at this move to the upside. And this trend, I'm just pulling it up for the first time, and you can see this trend line right up there. JP Morgan Chase, Goldman Sachs closed right at 200. Was it at 204 today? Again, it's a trend line I've drawn many years ago. And you see it go back to 2008, middle of 2015, and here we are. Middle of 2016, coming right up to that trend line. So it's interesting I pull this up here because that actually might be a good spot here for Goldman Sachs, although analysts came out this morning, upgraded stock to $237 a share. And look at XLF, and I pointed this out here just as the week started. The breakout here we're seeing to the upside for XLF. Consumer staples, not so good. And you can see possibly a pullback here to support at 47.50. How about energy? I think energy here is ready to break out. You see it right at the 770 level, has not been able to break it. But I do think some of the easing that Trump is doing here in the green, the environmental regulations is going to help boost some of these energy shares. All right, UPBOptionmillionaires.com. So look, the market here is setting up for a possible move to new all-time record highs at the end of 2016, much like it did at the end of 2014. And I'll just leave you with the S&P 500 chart here, the S&P 500 ETF, the spiders. You can see this wonderful pattern here. We had support, we hit it. We are now flagging possible move up into the 220 plus area for the S&P 500, the SPY ETF. UPB, have a good night. I'll see you in the morning. Bye.